In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, general obligation bonds liability is recorded in either A, general fund, B, capital projects fund, C, governmental activities, journal, D, debt service fund. Let's go through this again using the process of elimination. General obligation bonds liability is recorded in. So we have a bonds liability, general bonds liability. You can imagine us issuing the bonds. When we issue a bond, record the liability typically long-term liability, and therefore it's going to have to be on something that we record long-term liabilities in. In other words, are we talking about, I would always think about the two sides here. One is going to be the government-wide activities, the entity as a whole, on an accrual basis, normal kind of accounting where you would think we would record a liability. The other being fund side of things, the funds, the major grouping of funds being the governmental funds. The governmental funds being on a modified accrual basis not having long-term liabilities in them, therefore not likely to be having a bonds payable liability on there. So keeping that in mind, if we go through here, we're going to say, is it going to be the general fund? General fund is part of the governmental funds. Modified accrual basis doesn't have long-term liabilities, so it doesn't seem like that would be it. Second one says the capital project fund. It's going to be a fund, governmental fund. Modified accrual basis doesn't typically have long-term liabilities. You wouldn't think that would be it. C says governmental activities journal. Government as a whole, accrual basis, normal accounting. You would think it would include long-term liabilities. D says debt service fund. Fund accounting, governmental fund, modified accrual, doesn't have long-term liabilities. Doesn't seem like that would be the one. We're going to go with C. Final answer. General obligation bonds liability is recorded in C. Governmental activities journal. Next question. The debt service fund entry to record bond interest will debit either A. expenditures, bond interest, B. interfund transfer out, C. appropriations, or D. interest expense. Let's go through this again using the process of elimination. The debt service fund entry to record bond interest will include. So once again, we want to think about the two items here, two sides, the two halves. The entity as a whole, which is going to be the government-wide activities, normal accrual basis, it would be recorded as we would more expect interest to be recorded. And then we have the fund side of things, mainly governmental funds modified accrual might look a little bit more unusual. One of the primary unusualities being that we don't have expenses but expenditures. We here on the debt service fund going to be using a modified accrual basis method. So we're keeping that in mind, going to A, expenditures, bond interest. Okay, so that uses that funny term instead of expenses, expenditures, which you would expect on the debt service fund, so I'm going to keep that for now. B says the interfund transfer out. Interfund transfer out would be on a fund accounting, but you would think that would be used if we were like transferring to another fund, and we're not transferring to another fund here, so you wouldn't think it would be interfund. C says appropriations, another funny term that we would use in fund accounting, but not in normal accrual accounting. So it would be in the debt service fund, maybe, possibly, you would think, but possibly not. We don't always have a need for appropriations, but it might be in the governmental type of funds in any case, but it's not going to be related to bond interest, so that doesn't seem reasonable. And then D says interest expense, which you would expect to be the answer if it was normal accrual accounting, which it might be if it was for the government-wide activities on a normal accrual basis, but it's not because we're in the debt service fund, which is in the modified accrual. So we're going to go final answer A. The debt service fund entry to record bond interest will debit A. expenditures, bond interest. Next question. The premium amount when bonds are sold at a premium for a capital project, either A, increased cash in the capital project fund, B, is transferred to the debt service fund, C, is recorded in a proprietary fund, or D, is recorded as an expense in the government-wide activities. Let's go through this again using the process of elimination. The premium amount when bonds are sold at a premium for a capital project. So if we imagine this setup, we're going to say, okay, now this is a common type of scenario when we have a capital project, usually three kind of areas that we want to keep in our mind. One, government-wide activities. That's going to be the government as a whole. We're recording this information into. The capital project fund, that's where we're going to record the activity that we're building something like a bridge or a building. And then we often have the debt service fund, which is where we're going to have the payments for the interest and principal on things like bonds are going to be the three things that are interrelated. When we think about the government-wide activities on an accrual basis, it would do kind of what we would expect. The two funds, capital project and debt service, modified accrual basis, therefore don't have either long-term liabilities or long-term assets within them, which can seem a little bit unusual. So when we think about those funds, just be aware of that. So with the bonds, oftentimes what you want to do is think about what's going to happen on the government-wide activity and then go back in and say, well, what then is going to happen on the fund side of things? So if you think about a bond, the normal transaction that would happen on a government-wide in accordance with normal accrual accounting would be that we would debit cash would go up. This is going to be ugly, writing with a mouse here. We're going to say the cash goes up, let's say it goes up by 100, and then we have the bond payable that's going to go on the books, and that's going to be a liability. We're going to say it's on the books for 90, and then the 10 is going to be the premium because we sold it at a premium. So that's going to be the normal journal entry you would think on the government-wide type of activities. What's going to happen on the fund type of activities? Well, in the capital project fund, if we have the capital project fund, we're going to transfer to it. The cash is going to go up, but it's going to go up by the 9. So that component is going to be in the capital project fund. And the other side is going to go to other financing sources. It's not going to go to a payable because the payable is not in the capital project fund. And then if we think about the debt service fund, you would think that the liability would go in the debt service fund, but it's not. What we're gonna do is just put the premium amount in the debt service fund because it's basically related to interest. So oftentimes we're gonna put the premium in the debt service fund, debiting the premium there, and credit again other financing sources. So let's go through that. So the premium is what we're talking about. So it's normally oftentimes going to go to the debt service fund because it's going to be kind of interest, which we're going to use to pay off the interest in the future. So A says increase cash in the capital projects fund. So the premium isn't going to increase the cash. We're going to increase the cash in the capital projects fund by typically the face amount of the bond, not by the premium, which can be a little confusing, is transferred to the debt service fund. And that's typically what we'll do with it. We'll say the premium is going to go to the debt service fund because it's basically there to pay off the interest portions, which is going to be paid out of the debt service fund. C says it's recorded in the proprietary fund. Well, the proprietary fund's not involved here. And then D says is recorded as an expense in the government-wide activities. It will be recorded in the government-wide activities, but not as an expense. It's going to be recorded, under the liability, as would normally be the case when we record the bond issued at a premium. So it's not going to be D. Final answer B, the premium amount when bonds are sold at a premium for a capital project B is transferred to the debt service fund.